All right, we're on chapter 16. We are doing statement of cash flows. So you've been hearing about statement of cash flows since Principles 1. It's not that I think they're super hard. It's just hard to learn statement of cash flows when you don't have all the prerequisite information that you need. Okay. So on our first video, I'm going to do learning objective 16.1 on the first video, and then I'll do 2 and 3 together, and we're not doing 4 or 5. Okay. So let's go ahead and get started here. And so we are looking at the purposes for the statement of cash flows and to distinguish between operating, investing, and financing cash flows. Okay. I'm going to jump over here to a different tab where I've already wrote out the accounting equation. And I have the current assets, long-term assets, current liabilities, and long-term liabilities. One of the hardest things to do on statement of cash flows is to categorize it into operating, investing, or financing. So I've not ever seen this in a textbook. I made this up. So let's see how this goes. Okay. So current assets and current liabilities, anything that changes in current assets or current liabilities is always going to be an operating activity. Okay. Anything that affects long-term assets, that is an investing activity. A lot of students get confused because they think of stock when they think of investing, but when we think of stock, us issuing stock, that's actually a financing activity. Okay. So anything that affects long-term liabilities and stockholders' equity, those are financing activities, okay? Because that's how we pull money into the business to be able to finance those operations, okay? So investing involves long-term assets. Don't get that confused. Now, if we bought stock in another company and we're going to hold it for more than a year, then that would also be a long-term asset, okay? Then that's the balance sheet. Let's look at the things that are going to be on the income statement that we need, okay? We'll need net income or net loss, any depreciation expense, depletion expense, or amortization expense. Okay. If you'll remember, we depreciate property, plant, and equipment, we deplete natural resources, and we amortize intangible assets. Okay. All of these things off of the income statement, those are also going to be operating activities. Okay. So just categorizing these a lot of times is like half the battle to get through a statement of cash flows. Okay. When we do a statement of cash flows, it's really hard to like all of the other statements that we've done, we start at the beginning. When we do an income statement, we start with revenues and we work our way down. And then we get statement of owner's equity. We start with the beginning balance, move down to the ending balance sheet, start with assets, liabilities, and equity. When you're doing a statement of cash flows, it is a huge puzzle. Okay. And so that you don't miss anything in the puzzle, I suggest working these problems as they give you information, go put it where it belongs in that statement of cash flows. Don't try to find everything in operating, then everything in investing, and everything in financing. You might miss something that way. Okay. Um, if I only had one financial statement that I could see, I could only pick one, I would pick statement of cash flows because you can see a lot that's going on in the business in the statement of cash flows that you can't really see in other statements. I said that to a finance teacher one time, and they said, yes, that makes sense because really, statement of cash flows is a summary of the other three. I was like, that makes a lot of sense. Okay. So we have a statement of cash flows because we've done everything in accrual-based accounting, but cash is still important. Cash still pays the bills, right? So learning about statement of cash flows is very, very important. Okay. All right. What are some of the things that the statement of cash flows can do? It can help us predict future cash flows. It can evaluate management. It could predict the ability to pay debts and pay dividends. Okay, so it can do a lot. Okay, we have these three classifications. They are always in this order: operating, investing, and financing. Always. Okay, so let's talk about what operating activities are. I already drew that accounting equation out. Anything that affects the current assets, current liabilities, those are all operating activities. Okay. And think about that. What is this business? What are they in the business of doing? Those are the things you're going to see in the operating section of the statement of cash flows. Okay. Is probably the most important category. Okay. Then when we get to investing, we are looking at long-term assets. Did we purchase new long-term assets? Did we sell new long-term assets? Okay. And then financing. How do we pull money into a business to be able to finance those operations, long-term liabilities and issuing stock? Okay. Look at that. That's very similar to what I drew out. I like mine better because I've been drawing that exact same thing out for you for a couple of chapters now. Okay. All right. So then we may have non-cash investing and financing activities. I'm going to jump back over here really quick. This is where you would purchase let's make that go away. You would purchase a long-term asset by financing it or issuing debt. Okay. So you buy a building, you didn't pay cash for it, but you have a note payable on it. Okay. That is a non-cash investing and financing activity. Okay. That is not going to appear in any of the numbers, but it is disclosed at the bottom of the statement of cash flows or in the notes to the financial statements. Okay. All right. We're looking at these operating activities. We have cash inflows, cash outflows on all of these. Okay. And I have one simple rule to get it to where it will help you understand whether you're adding it or subtracting it. Okay. So we'll get to that here in just a few minutes. Okay. We are actually not going to do the direct method. That is in one of those learning objectives that we are not going to learn. It sounds like the direct method would be easier. It is actually not easier. It is actually more complicated than the indirect method. Okay. And GAAP says is if a business chooses to do the direct method for the statement of cash flows, they actually make them disclose the indirect method. So nobody wants to do double work, right? So nobody does the direct method. Although the direct method is still taught and it is still taught in intermediate accounting and it is still tested on the CPA exam. Okay. It really only makes a big difference in the operating section. It doesn't make a difference in the other two. Okay. All right. We will pick up on the next learning objective in the next video.